Hello and welcome to the look ahead for Friday, the 14th of June with me, Fiona Sincotta, Senior Market Analyst at City Index. So overnight, we'll be getting the Bank of Japan's interest rate decision. The central bank is not expected to move on interest rates, but more on that in a moment. In the European session, we've got Eurozone trade balance. We also have the US Michigan sentiment data, and ECB President Christine Lagarde will be speaking late on Friday. So just starting then with the Bank of Japan interest rate decision. As I said, central banks not expected to move on interest rates. However, they may taper aggressive bond purchases, which would allow the yields to move more freely. Now, the focus has been on wage data and wage growth. And I think whilst there has been some steps forward, some signs of progress in wage growth and therefore in inflation, the Bank of Japan won't be convinced to move yet. They'll want to see more progress as far as wage growth is concerned. They did see 2.1% growth in April. That was up from 1% in March. So as I said, there has been some progress, but more details and more progress needed to be seen. So we've also got this is the USD Japanese yen chart here in front of us. Now, obviously, this has been a big week for US data and the Federal Reserve as well. We can see that actually the cooler than expected US inflation, which was then swiftly followed by the Federal Reserve actually saying that they only looking to cut interest rates once this year, didn't really knock the USD Japanese yen off its trajectory, which has been one of grinding northwards. It's supported by the 50 SMA on its move higher. Now, on the upside, if we do get a slightly more dovish sounding Bank of Japan, then we could see this trade continue to push higher. Levels to be watching out for 157.60. That is the June high. Above there, 158, and then of course that key 160 number at the top. As far as support is concerned, so if we get a sense of a more hawkish Bank of Japan that's looking towards moving towards normalizing interest rates sooner rather than later, then that could actually put some pressure on the US dollar, Japanese yen. Levels on the downside, be watching out for the 50 SMA, which is at around the 155, just above the 155 level. But also 155 is a pretty key psychological level there as well, which has been in focus a couple of times over the past few months. So I think it's also what will be, just bear with me, useful to have a look at here is actually what's going on with the US dollar. Now, obviously, we had that big sell-off yesterday, but having a look at that chart, and that was after that weaker than expected inflation data. Then we had the Fed saying actually just one rate cut. That's down from 3 that was predicted back in March. So actually, we've seen the US dollar recover quite swiftly, even though we had data today, PPI data, which showed that the wholesale inflation reinforces basically the view that inflation is on the right trajectory. We also had jobless claims, which rose to the highest level in 9 months. So data does seem to be supporting slight weakening in the economy. Even so, with the Fed only really looking to cut rates once this year, I think that does really support the US dollar. Now, if we have a look at that long lower wick that just briefly broke below the 100 SMA and the 200 SMA, spike back up. They're suggesting that there's little selling demand at those lower levels. Now the price, as we speak, is testing that 105 resistance. If we get a push above that, then the other levels to be watching out for up there is 105.75 and then 106.50. That's the May high at the top of the range there. And then on the lower side, sellers are going to be needing to break below that the 200 SMA. That's at 104.50. Below that, the 104 level comes back into focus. As I said, we've got the sentiment data tomorrow to be watching out for. If we get stronger than expected sentiment, then that could boost the dollar further. Now, we're looking here at the DAX. because we do have, as I said, Eurozone trade data. Also, ECB Christine Lagarde is due to speak. But actually, I think right now the biggest impact on the DAX and European markets could actually be the uncertainty surrounding that election and the political uncertainty surrounding the election in France. Obviously, we've seen that Macron is actually massively behind in the polls, so it does point to a Marine Le Pen's right-wing party potentially taking power later this month when the election is held. So basically, this huge bearish engulfing candle there has just wiped out yesterday's gains. Data today has shown that the German PPI wholesale inflation cooled by more than expected. So that would have been supportive of stocks, really, because that could point to the ECB, potentially moving for another rate cut sooner rather than later. But so just levels to be watching. Obviously, if we get a sort of more hawkish sounding ECB tomorrow, then that could put more pressure on stocks. But I think it's going to be watching the elections quite closely, just because uncertainty, we know the markets really dislike uncertainty, and they're not really sure. Marine Le Pen is a bit of an unknown, really, as far as the sort of, policies and what's to be expected. So until there's a little bit more clarity on that, we could get some nerves showing up in markets across Europe. As far as levels are concerned, 50 SMA just being tested and broken through being tested now. It's at 18,350. Below that, you've got the 18,240, which is the April high support, and then below that 18,000 round number. On the upside, if we find that 50 SMA holds, level on the upside is 18,650. That is the weekly high, and above that we'll get the 18,928 all-time high back into focus. Just finally, just going to have a quick look at oil. Didn't mention at the start that we do have Baker Hughes oil rig counts, as we do every Friday. So oil's had a pretty impressive recovery across the week. So despite the Federal Reserve, reining in rate cut expectations, we have seen oil prices push higher. There has been some encouraging noises regarding demand forecast as far as the OPEC monthly report is concerned, and the EIA and the IEA. But also, we've seen this tremendous recovery from the low, which was reached at the start of June, of 72.50. On the upside, actually, that recovery is just testing the 200 SMA, which is, it's not actually, it did try to test the 100 SMA, which is just below the 200 SMA, but that's going to be the level to watch on the upside. That's at $80, just around the $80 level, which is also the psychological level, which is almost also the May high, which is at 80.60. A rise above that, watch out for the 84.50, which is the late April high. On the downside, failure to get over that 100 SMA and the 200 SMA could bring 76.80 into focus, which is the level that has offered support and resistance on several occasions over the past few months. Below there, watch again for the 72.50 level. So I hope that you like what you've seen, and if you have, then please do give this video a like. Otherwise, please, and if you'd like to receive more videos like it, then please do subscribe.